Should I use Fidelity Go? Fidelity Go is an appealing option for investors looking to simplify their investing process. It is a robo-advisor service provided by Fidelity Investments, one of the largest and most reputable brokerage firms in the U.S. Interestingly, Fidelity Go does not charge management fees for accounts under $25,000, making it a highly cost-effective choice for beginners. Additionally, it utilizes Fidelity Flex mutual funds, which come with no expense ratios, potentially offering significant cost savings compared to competitors that typically charge higher fees on their funds. Fidelity Go is designed to cater primarily to beginner and intermediate investors seeking a low-maintenance, automated approach to investing. It creates personalized investment portfolios based on user responses to a series of questions about risk tolerance and financial goals. This makes the service attractive for those who do not have the time or expertise to actively manage their investments. The process is straightforward, requiring a minimum deposit of just $10 to start investing. Once the portfolio is established, it is managed automatically, with periodic rebalancing to align with the client's goals. A major advantage of Fidelity Go is its integration with Fidelity's broader ecosystem. Users can manage their accounts through the Fidelity mobile app, which offers access to tools like Fidelity Spire for goal setting and tracking. Furthermore, unlike many robo-advisors that rely solely on algorithms, Fidelity Go incorporates human oversight in portfolio management, adding a layer of expertise that many fully automated services lack. This hybrid model ensures a balance of automation and human insight, enhancing the overall investment strategy. However, Fidelity Go does have some limitations. One significant drawback is the absence of tax loss harvesting, a feature that many competitors such as Betterment and Wealthfront offer. This can be a disadvantage for taxable accounts, as investors miss out on the potential tax benefits from offsetting gains with losses. Another downside is the limited selection of investment options. Fidelity Go exclusively uses Fidelity Flex mutual funds, which restricts access to a broader range of assets like REITs or commodities. This may not suit investors seeking more diversification beyond standard stock and bond allocations. For investors with higher balances, the cost structure becomes less competitive. Once an account exceeds $25,000, a management fee of 0.35% per year is applied, which can be considered high compared to other low-cost robo-advisors. This fee structure makes it less appealing for those with substantial portfolios, especially when alternatives like Vanguard Digital Advisor or Schwab Intelligent Portfolios offer similar services with lower or no advisory fees. Fidelity Go is well regarded for its user-friendly interface and robust customer support. Fidelity offers 24/7 customer service, a significant advantage for investors needing assistance or seeking guidance outside of typical business hours. The platform also benefits from Fidelity's extensive educational resources, which help users learn more about investing and financial planning. In summary, Fidelity Go is an excellent choice for beginner investors or those seeking a straightforward, hands-off approach to building their portfolios. Its low fees for smaller accounts, lack of an initial deposit requirement, and strong customer service make it highly accessible. However, investors looking for more advanced features like tax optimization or broader investment options might find the platform's limitations restrictive, especially as account balances grow. Therefore, while Fidelity Go excels as a beginner-friendly robo-advisor, those with higher investment balances or seeking greater customization may want to explore other options.